Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Canada clash. Trade tensions rise after President Trump threatens a 35% tariff on some Canadian goods from August the 1st. He's also raised the prospect of increasing levies on most other countries. Trade and tariffs likely top of the agenda when U.S. Secretary of State Marco Rubio and his Chinese counterpart Wang Yi meet today in Kuala Lumpur. And oil trading higher this morning after falling more than 2% on Thursday, as OPEC Plus reportedly discusses a pause to supply hikes from October onwards. Well, it's just gone 8 a.m. across the Emirates, 5 a.m. in the UK. I'm back in the UK from a couple of days in Vienna. I'm Johanna Versace in London. And of course, once again, tariffs and tariff headlines dominating the news wires this morning. But let's take a look at how S&P futures are reacting to the news of a potential higher baseline tariff for countries around the world, something that President Trump has flouted in the last 12 hours, in addition to an increase in the tariff potentially applied on Canada too. So S&P futures pulling back from an all-time record high. It should be noted yesterday, another record high for the Wall Street Major. Today down 0.25%, 6,300. We are just above that. As for the handover from Asia, today marginally positive. You can see most of these indices trading in the green, up 0.5% for the Asia Pacific Index. We'll get more context from Avril in a second. The USD also seeing a bid this morning, up 15 basis points after those tariff headlines came out, which is contrary to recent price action. Of course, the dollar trading more weakly on the year. And then Brent this morning back just close to $69, up 0.4%. This despite the fact that some headlines came through yesterday suggesting that delegates were thinking about pausing the next increase of barrels or potential barrels to come back to the market. Remember, we've been discussing this all week. In August, they are likely to round up the first clip of voluntary cuts worth about 2.2 million barrels per day. Then attention will focus to another tranche of cuts worth 1.6 million barrels per day. Yesterday, the headline suggested that for that second clip, they may actually wait a little bit and see whether the market can digest it. So that's why you're getting that reaction this morning. Something else I want to draw your attention to, VIX. So this is essentially volatility on stock market indices, U.S. stock markets, and take a look at what has been happening, or rather not been happening, to this index. Around Liberation Day back in April, when we had all of that tariff uncertainty, we shot up to almost 50. We are now back at around just shy of 16, telling you that markets have become more and more immune to all of these tariff headlines. And of course, it's not just volatility lower, but U.S. stock markets at all-time highs. So perhaps that tells you something about how investors perceive the real threat of these tariffs. Now, speaking of, let's talk about how markets in Asia are faring this morning. Avril Hong is in our Singapore studio. Avril, run us through the price action today.
Yeah, Joanna, interesting how we saw stocks in the region erase gains following the concerns about potentially higher blanket levies and then extending gains when China markets open. Also because we got word that Marco Rubio and Wang Yi would be meeting in Malaysia. Maybe this is a prelude to a presidential summit at some point. Overall, the takeaway for investors is that at this point, steady as she goes on U.S.-China relations. There's also optimism about policy support from Chinese authorities that's fueling some appetite for property-related stocks. More recent weeks, they've also been signaling that they could be taking steps to address issues such as overcapacity, excess competition. That's, of course, something that has been driving down profits across industries in China. We also got Goldman upgrading to market weight Hong Kong stocks. So we're seeing that outperformance quite clearly there. But I think overall, you are increasingly, to your point earlier, getting the sense that the reaction in markets to these tariff headlines, they're getting more and more muted. Joanna.
Avril, thank you so much. Green handover and green dress from Avril this morning. All right, President Trump is threatening to impose a 35% tariff on Canadian goods starting August the 1st, but a U.S. official has told Bloomberg that USMCA-compliant goods would continue to be exempt from levies. Canadian Foreign Minister Anita Anand has called the tariffs unjustified before the announcement, adding that the nation is engaging in further talks with the U.S.
those tariffs are hitting us as well, and we believe they're unjustified, and we're engaged in complex negotiations with the United States to address the tariffs and to ensure that we can come to an agreement.
Well, for more, let's bring in senior editor Bill Ferries. Bill, so a bunch of countries around the world have been on the receiving end of these letters. I've been calling them the reverse Santa letters because there's not a gift inside and nobody wants to receive them. What do we know about the latest with Canada? Because it's not, in theory, going to be applied to all Canadian goods.
Right. Yeah, we really will need a lot more details from the White House on which products they think will actually face this 35% tariff. The understanding from our reporting is that, the goods, as you mentioned, that are negotiated under the U.S. MCA will not be affected by that. That includes the majority of the products traded or imported from Canada, and it also includes things like energy, which are still subject to a much lower tariff rate. So the final total impact of what 35% means and which industries it's really going to hit is kind of yet to be seen. And the comments you just played there from Canada's foreign minister suggest that they have some confidence that the remaining 3 weeks or so, perhaps they can make some more deals with the White House to reverse maybe the worst impact of those. But it does show President Trump kind of going forward, continuing to send these letters out, continuing to push forward on this policy, and perhaps losing patience with the negotiations that have been taking place.
Yeah, and some comments coming through from the Canadian Prime Minister saying, Mark Carney, saying the government will continue to work towards that revised August the 1st deadline. So it does show that they're willing to engage with the U.S. over the next couple of weeks versus, say, the reaction that we've got from the Brazilian president, Lula, yesterday. Very defiant tone, Bill.
Yeah, this was a very different case. President Trump announcing that he could put 50% tariffs on Brazilian imports. This would affect a lot of really critical industries, agriculture, the orange juice sector, for instance. It also affect the airline industry. A lot of Embraer planes are exported to the United States and used widely. But Lula pushing back and basically saying there's not a lot to talk about because Trump's justification for this was an ongoing Supreme Court case against former President Jair Bolsonaro. He is facing charges of an attempted coup after his supporters stormed government buildings in 2023, almost 2 years to the date after Trump's supporters stormed the U.S. Capitol. And so the kind of political justification for these 50% tariffs on Brazil in the Brazilian leader's mind kind of leaves them without much to negotiate. The Brazilian government says this is essentially trying to meddle in internal policies and a judicial proceeding, and they're not going to really talk further about it.
Yeah, and also worth reminding viewers that the U.S. actually enjoyed a trade surplus with Brazil last year. Bloomberg's Bill Ferries, thank you so much. Now, U.S. stock futures retreated and the dollar strengthened as Trump suggested higher tariff rates on most trading partners. Joining us now is Eugenia Victorino, SEB's head of Asia strategy. So we spoke about the letters with Bill. Obviously, this week the attention is on Brazil, on Canada. But also yesterday, in an interview with NBC, Trump floated the possibility of a higher universal tariff, 15 or 20%. Why do you think the market isn't reacting more today?
Well, I think it's clear, right? It has been clear for a few months now that the tariffs have been persistently moving goals. So it's very difficult for trade negotiators to keep having the goals changed on a whim. But at this point, what is really important is to find the final tariff for every trading partner. And that is why it is very difficult to actually react to the possibility, because we're still just on the possibility. And more importantly, we're also seeing a different signal as far as the tariffs for the ASEAN. Here in Asia, we've already heard from Secretary of State Marco Rubio say that the tariffs in ASEAN and the region will probably come in lower than the rest of the trading partners. So now we're just looking, how will the relative prices change? Because what we do know is that it's likely going to be higher than 10%, but not everybody's going to be treated the same way.
So let me just ask you specifically about the Asian countries that you cover. To what extent does the Vietnam framework that was announced on July the 2nd provide a template for other countries, specifically that term, that clause that suggests that any Chinese goods passing through Vietnam and then exported onto the U.S. will be subject to a 40% tariff? Is that a template, do you think, that the U.S. are going to look to apply to other countries in the region?
I would expect that the tariffs in the region would eventually converge to a certain level that are very near each other. Otherwise, it's not going to make a difference in the US's trade balance. Having said that, it is quite clear that the tiered system on the tariffs on Vietnam is a way to avoid the transshipment. Whether or not that will be implemented by the other ASEAN countries is under question right now. But I think it's really just implementing what should already be done.
What about the big one? How do you think U.S.-China trade talks are going? We supposedly had that breakthrough in Geneva about, almost 2 months ago now. What is being the follow-through from that?
So right now, the U.S. and China trade talks are not even on the tariffs anymore. It's about export controls. But because the export controls are really about licenses that are just for 6 months, and then the structural issues behind them are still unresolved, it is very likely that we will see yet another tussle between Washington and Beijing.
So what do you think this means for markets? Because earlier on in the show, we were talking about how low the VIX is, that U.S. markets are at all-time highs. Is there anything you're doing or recommending to take advantage of this uncertainty?
Right now, what is clear is that the market cannot really react too much on the tariffs. But then the fundamentals are not changed. So basically, what the market is sure of is that they are cautious of the fiscal outlook of certain countries. So for example, they are cautious of the fiscal situation in the US, in Japan, in the UK. That one you can react on. And that is why we are actually much more watchful of the bond auctions in Japan, because that's going to be a litmus test of how the market will react.
Yeah. What about, you mentioned fiscal. To what extent do you think the pressure is on China to provide further support to the economy? And do you think that there's a chance that we may get actually another fiscal boost out of China in the coming months?
I am expecting another package in the coming months, but not necessarily in the July Politburo, because looking at the recent numbers, it looks like the Q2 GDP numbers are going to be quite good. That would actually mean that China is running above the 5% target for the full year. However, going into Q3 and Q4, it is very likely that the exports of China will slow down, because now the transshipment route is going to be even harder. That is where the government will likely have to step in further.
Yeah, valid point. Eugenia Victorino, SEB's Head of Asia Strategy, thank you so much for joining us on the show today. Always good to talk to you. Now, President Trump has told NBC News he plans to make a major statement on Russia on Monday and expects the Senate to pass tougher sanctions on Moscow. This comes as the U.S. prepares to send more American weapons to Ukraine through purchases by NATO allies. In the NBC interview, Trump also reiterated criticism of President Vladimir Putin over Russia's continued attacks on Ukraine. And coming up, U.S. Secretary of State Marco Rubio set to meet with Chinese Foreign Minister Wang Yi today in Malaysia. A preview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in London. U.S. Secretary of State Marco Rubio will meet with his Chinese counterpart in Malaysia on Friday. These will be the first in-person talks between the two and a possible prelude to a presidential summit. For more, China correspondent Min Min Lo joins us now from the ASEAN meetings in Kuala Lumpur. Min Min, this feels like a big deal, the fact that you've got two senior members of both governments meeting. What can we expect out of this meeting between Marco Rubio and Chinese Vice Premier?
It's with the Chinese Foreign Minister Wang Yi, but it is a very big deal because it is the first time that the two men will meet. Yes, that's right. It's the first time that they will be meeting face to face. They had a chance to meet back in February at the sidelines of the UN Security Council meeting in New York, but they didn't use that opportunity. So the fact that this meeting is happening at all, it just shows you that perhaps relations between US-China is warming up a little bit, especially after both sides agreed to stick to those terms of the agreement that were made in Geneva. Of course, a very big thing that we are watching out for, will the two men discuss a potential trip by President Trump to China? Marco Rubio didn't mention whether that was on the agenda, but he said he will be raising the issue of Russia. He said China has been sending as much help as possible to Russia without getting caught, and this is something they want to talk about, especially ahead of President Trump's expected announcement on Monday, possibly something about sanctions on Russia. Of course, there's also been questions about whether China will be implicated in secondary sanctions for buying oil, LNG from Russia as well. And of course, the broader backdrop of that trade tension, right? Marco Rubio's portfolio doesn't really cover trade that's under Scott Bessent. But of course, Scott Bessent has also said he is planning to meet with his Chinese counterparts in the coming weeks. Not too clear whether it will be in Beijing or elsewhere.
So Wang Yi has had this, or is anticipated as going to be having this meeting with Marco Rubio, but he's had several other bilateral meetings. What have been the high-level takeaways?
Yeah, so he had a meeting with ASEAN ministers. He also had a bilateral with the Vietnamese foreign minister. And it's interesting because Wang Yi's tone was quite positive. He said China is willing to work with Vietnam to ensure the legitimate interests of all countries is protected. And this is interesting against this backdrop of Vietnam signing that deal with the US, the tiered tariff levels, especially 40% on tranship goods. So that's really targeting a backdoor for Chinese exporters. And despite the Chinese rhetoric so far about taking retaliatory action or the threat of doing that against countries that cuts deals that undermine Chinese interests, the tone from Wang Yi actually still remaining pretty constructive on that front. He also met with the Japanese foreign minister as well, and also some positive momentum there. The Japanese foreign minister did urge China to ensure that Japanese companies can still have access to rare earths, but they agreed to work towards resumption of beef exports from Japan to China.
Bloomberg's Min Min Lo, live from Kuala Lumpur. Thank you so much for giving us the latest. And coming up, Congo is looking to double its oil production in 5 years. We hear more from the Congolese Minister of Hydrocarbons on why he backs OPEC's decision to hike output. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in London. The Republic of Congo is planning to double oil production in 5 years, in line with targets set by OPEC. Speaking to me on the sidelines of the seminar in Vienna, the Congolese Minister of Hydrocarbons defended the recent output hike announcement, saying his country will also increase production year after year.
It's a big concern for us because what we want, as I said, stability. And stability will be good not only for OPEC and OPEC Plus, it will be also good for non-OPEC. So all the time we say, please come to us. We should have a dialogue, we should talk, we should exchange, we should have the same strategy. I hope that we have more non-OPEC and more OPEC Plus tomorrow. We know there is a big player. He's not very happy with what we're doing, but he's taking profit of what we're doing. So we're telling him, please come and join us. And why not having a dream to see all the producing countries being together. But in the same time, we're making a very, very precise follow-up of the situation of the non-OPEC countries, non-OPEC production, what they're doing, and we include it in our figures. So even if they are not there, I hope that they're taking account of what we're doing.
Yeah. As one of the perhaps smaller producers within OPEC Plus, are you relieved to see the group finally start putting barrels back to the market again because it takes some pressure off?
Why not? Why not? Really, we're still discussing all the time, and I think we'll have some discussion with the group of 8 and see what we really think it should be good for us for the next time.
Yeah, can I just ask you about your own quota? It's often the case that Congo underperforms the OPEC Plus quota because it's been quite difficult to hit those targets. What is your long-term plan to increase production?
We are OPEC member, and we are very happy to have OPEC Plus with us. And when we discuss as OPEC members, we try to have a unanimous decision. We try to have it. My country now, we have staggered. We will have independent sources coming to the countries, all the countries, including mine, to have the best evaluation of the production capacities. Our target now is to double our production, I hope, in 5 years. So they will see. They will see day after day, year after year. They will see what we're producing really, and according to our policy, according to our discussion internally with the other member of OPEC, we will see. But the target is to double the production in 5 years.
That was the Congolese Minister of Hydrocarbons, Bruno Jean-Richard Itua. Now for a look at some of the other stories we're following today. Nissan has raised $4.5 billion through a junk bond sale in dollars and euros. And one component offered a yield of 8.1%. That is the company's highest since 1986. Despite concerns around the company's strategic plans, the automaker drew $11 billion in demand for the sale. It says the funds will help refinance its debt. Tesla shares jumped on plans to expand its robo-taxi service into California and Arizona after its recent rollout in Texas. As CEO Elon Musk expects the robo-taxis could launch in the San Francisco Bay Area in a month or two, pending regulatory approval. Tesla has also applied to operate in Arizona's Phoenix area, and a decision is expected by the end of July. Apple is planning a pipeline of new products for release during the first half of 2026, including a new low-end iPhone, multiple iPads, and upgraded Macs. A budget smartphone dubbed the iPhone 17e will be a follow-up to a $599 model that Apple launched earlier this year. The new products are part of a push to get back to more consistent revenue growth following this year's iPhone launch. And a quick look at equity futures as we head to the break. Tariffs once again in focus, with the letter being sent to Canada this time. S&P futures down 0.2%, just off those all-time record highs. And coming up, OPEC Plus is reportedly discussing a pause to the supply hikes from October. We'll discuss the outlook with Standard Chartered's Carla Slim. That's coming up next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Canada clash. Trade tensions rise after President Trump threatens a 35% tariff on some Canadian goods from August the 1st. He's also raised the prospect of increasing levies on most other countries. Trade and tariffs likely top of the agenda when U.S. Secretary of State Marco Rubio and his Chinese counterpart Wang Yi meet today in Kuala Lumpur. And oil trading higher this morning after falling more than 2% on Thursday, as OPEC Plus reportedly discusses a pause to supply hikes from October onwards. It's just gone 8:30 a.m. across the Emirates, 5:30 a.m. in the UK. I'm Johanna Bersetchi in London. It is the final trading day of the week. It's been quite a long week, but as ever, the news headlines are dominated by tariffs, tariff threats, the letters that the Trump administration has been sending out this week to various countries. Brazil was the focus yesterday. Today, the focus is on Canada, with a potential tariff of up to 35% applied on some goods that are not USMCA compliant. So the reaction in futures marginally negative, I've got to say. S&P down about 0.2%, coming off those all-time highs as investors are now focusing on the upcoming earnings season that's about to start. So looking ahead and perhaps looking through some of this tariff noise. We've also got Asia Pacific, the handover this morning, pretty strong as well. You continue to see a strong performance in those Chinese equities. So that has been one of the themes this week as well. USD also slightly firmer this morning, up 0.2%. And then Brent just shy of $69, actually recuperating a bit of the losses that we saw in yesterday's session in the afternoon, getting closer to $70 once again, up 0.2%. As for the VIX, this one I thought was quite notable because it just tells you how immune markets have become to all of these various tariff threats. Now, look at what the VIX did back in April around Liberation Day, or what Trump called Liberation Day, when he announced all of those reciprocal tariffs. We spiked up almost to more than 50 and have been steadily declining ever since. And even though we saw a roll-off of that 90-day pause and perhaps a pushback to August the 1st now, the option market or the implied volatility on some of these equity indices really has not reacted. So that tells you that perhaps investors are becoming more and more immune to some of these tariff headlines, or what some people are calling the taco trade. Now, Bloomberg understands OPEC Plus is discussing a pause in further production increases from October after its next monthly hike. Delegates say that key OPEC Plus nations are concerned prices will sink further if they continue to bolster production after September. Joining us is Carla Slim, Standard Chartered MENA Economist. Carla, it's good to have you with us. Well, I was at the OPEC seminar all of this week discussing the weeds and the granularity of all of these decisions that OPEC Plus have been making. I've got to say, it actually stood out to me that Standard Chartered seemed to have a bit of an anti-consensus view in terms of the market balance in Q4. You actually see the market being balanced, versus most of the other analysts I've spoken to see the oil market moving into oversupply territory by the end of this year. Why are you relatively bullish?
Happy Friday, Joumana, and thank you for having me back on the show. I think where we are a little bit more bullish is on the global demand front for oil, and this is also what we've been hearing from various OPEC members, a quite constructive view on prospects for global oil demand growth. We've just published our global focus report, so our global outlook for the second half. And when we scan by regions, our expectations, our forecasts for the second half of the year by way of growth, we still see growth in Asia of around 4.9%, the Middle East as well, another bright spot, specifically the GCC. So this is in comparison with major developed economies where we see lower growth. So what this means as a global oil demand picture is that we're still quite constructive. We're not expecting a global recession or a large global slowdown. So this should bode well for the fundamentals, which appear to be being priced in the oil markets today.
Yeah, the big one obviously is Saudi Arabia, and most of the voluntary cut putback has actually come from Saudi Arabia, the lion's share of it. What does this all mean for Saudi's finances?
We've already seen the first quarter fiscal deficit for Saudi coming in slightly on the higher end. We expect to see the fiscal deficit widen compared to the projections, and this should translate to higher leverage, not just at the sovereign level, but also at various levels of economic sectors. So we expect debt and private credit to increase in Saudi. The big question is as well, how is the reaction function of Saudi policymakers? Are we going to see investment plans being pulled back? What's the reaction function? We believe there are two factors that could change the macro outlook for Saudi. First is if the fiscal deficit crosses 4% and inches closer to 5% of GDP, we believe that would cause the macro outlook to change and investment plans to change. And then if public debt to GDP starts suddenly rising faster than expected, closer to the 40% internal mark, that self-imposed debt ceiling that Saudi has.
Yeah, interesting. You know, speaking of debt dynamics, another story that caught my attention overnight, Moody's has upgraded Oman to investment grade. And they state, in the statement, they say the upgrade reflects our expectation that Oman's government debt metrics will remain robust even if oil prices moderate below our medium-term assumption of $65 a barrel. Was this expected, Carla?
This was very much expected, Jumana, in the sense that when we look at the debt dynamics across the GCC, while on one hand we have debt in Saudi rising gradually, slowly but surely, in other parts of the GCC, we've been on a multi-year deleveraging effort where you have sovereigns like Oman, like Qatar, like the UAE to a certain extent that have put a lot of effort to use fiscal surpluses, budget surpluses, to pay back debt. And this has translated into positive outcomes for credit ratings and upward pressure in credit ratings. So the Moody's upgrade was very much expected for Oman, and we should expect to see more of these pressures across.
Interesting. I want to turn to tariffs and the impact that it's having across the region. And I wonder to what extent the perhaps indirect impact of tariffs, or even direct impact of tariffs, influenced Egypt yesterday when the Central Bank of Egypt surprised everybody by not continuing with the easing cycle.
You're right, Jumana, it was a surprise. Going into the decision, the market was quite split. We had various analysts calling for a 100 basis points cut, which we were in that camp. And we had various analysts also calling for a pause. Now, with regards to the tariff impact specifically, Egypt managed to actually weather the global market wobble after the tariff package was announced in early April. So we've seen the easing cycle proceed through the tariff uncertainty. At the moment, what it seems to look like is that Egypt is a little bit concerned that the fluctuations in its inflation prints have put inflation in a sort of uncertain territory, specifically with regards to how the fiscal reforms are translating. We know that the IMF program has delayed the fifth review and combined it with the sixth review. So there could be more fiscal reforms coming in that could be slightly inflationary, and the central bank may have decided that it's better to err on the side of even more caution after it had already made the size of the easing clip smaller from 225 basis points to 100 basis points. So really a very cautious central bank yesterday.
Yeah. Carla, always good to chat to you. Thanks for coming on. Carla Slim, Standard Chartered MENA Economist. And a look at some of the other stories we're following today. The European Union has reached an agreement with Israel to allow more aid into Gaza. The deal is expected to be implemented in the coming days, with several aid routes expected to reopen into Gaza through Egypt. Other crossing points in the northern and southern areas of the Gaza Strip that border Israel are also expected to resume. Kaja Kallas, EU's foreign policy chief, negotiated the deal with her Israeli counterpart, and she spoke to us, as well as U.S. Secretary of State Marco Rubio, at the ASEAN Foreign Ministers meeting in Kuala Lumpur.
We achieved an agreement on very concrete terms, how many trucks will get in, how many crossings will be opened, distribution points so that people would receive hub water distribution for the Gazan people, also waste management, a lot of issues. We reached an agreement, and we really need to see also this agreement put in practice.
Well, we're hopeful. I mean, in the end, we're hoping they'll move to proximity talks. It appears that generally the terms have been agreed to, but obviously now you need to have talks about how you implement those terms. And I spoke to Steve Woodcock last night, and he's optimistic that proximity talks will begin fairly soon, expedited and facilitated by the Qataris and the Egyptians.
The Financial Times reports 2 of Boston Consulting Group's senior executives will leave their leadership roles after revelations about the firm's work in Gaza. It comes after an FD investigation found a BCG team helped model the costs of relocating Palestinians outside Gaza as part of a project examining how the shattered enclave could be rebuilt as a regional trading hub. The firm's chief risk officer and head of BCG's social impact practice will lose these jobs following the results of an internal investigation. The FT says the firm has already fired the 2 partners who led the work. BCG says they were misled about the exact nature of the project. Vietnam's trade deal with the U.S. includes a 20% tariff rate, but also gave it first mover advantage in Southeast Asia. Bloomberg Originals has been investigating why Vietnam needed to secure a deal now. Here's a preview.
land once devastated by American bombing now accounts for half of Nike's global shoe production. Hundreds of other American companies and their suppliers have manufacturing bases in Vietnam too. As the Southeast Asian country's annual GDP climbed, exports to the U.S. grew. Now, Vietnam is one of the countries most dependent on American trade.
The United States is Vietnam's largest export market.
Vietnam's massive trade surplus with the U.S. has made it a key target for Donald Trump.
The problem is they charge us 90%. We're going to charge them 46% tariff.
If Vietnam were to lose access to the American market, that would have a profound effect. It would ripple across the economy.
Which is why this was imperative for the Vietnamese government.
President Trump says he's reached a trade deal with Vietnam following weeks of intense diplomacy between the two nations.
Unlike military conflicts, trade wars are at least fought without bloodshed. But they can still do damage. And even with a deal, the economic relationship between the U.S. and Vietnam faces an uncertain future.
And subscribers can see that documentary in full right now on the terminal or at Bloomberg.com. It will be available later on the Bloomberg Originals YouTube channel as well. And coming up, Senegal is scrapping a $6 billion project to build the so-called Akon city. The R&B singer failing to deliver on his dream of a real-life Wakanda. All the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in London. Well, Senegal has scrapped R&B singer Akon's plans for a multi-billion-dollar city development on the country's Atlantic coast. Most of the land previously set aside for a futuristic real-life Wakanda is now back under state control, with Senegal now opting for a scaled-back project that will rely on private funding. For more, Bloomberg's Andira Ganga joins me now. Well, Akon, that's a bit of a throwback. Tell us what went wrong with his ambitions. What went wrong with the project?
Hi, Jumana. So to understand what went wrong, we have to go back to the basics of this project. This was supposed to be a $6 billion project. It's supposed to be a futuristic tech city that is set in Senegal. And what he was intending to do was build a state-of-the-art hospital, a university. The city was supposed to be powered by solar. And this was supposed to be an investment that nobody has ever seen before on the continent. The residents were to use Akon, which is a cryptocurrency by Akon. And so this was going to turn a farming village in Senegal into a tech city. However, for this to come to life, he needed to raise money. And to just put this into context, $6 billion is 3 times the airport that Rwanda is building in Bugesera. It's $1 billion above the new airport that Ethiopia is building. And they said projects that are backed by the government. Akon is an individual, and he was relying on private investment, and we saw a lot of pledges and bids fail to materialize, and that's where rain began beating him. Nearly a decade later, there's not much to show from this project except a welcome center and a basketball court, and we saw the Tourism Development Authority begin to lose patience with him. And last year, they sent him a notice saying he has 2 weeks to begin developing the project, or else he'll lose the land, and that is exactly what has happened. Akon has spoken to the media before saying that it doesn't take 24 hours to build a city, but Senegal is saying neither does it take 10 years.
That is a very valid point. Okay, so what do we know about the government's new development plan now that the land is back under state control?
They're scaling down their ambitions, to be honest with you. They're going from futuristic to realistic. They want to turn it into a tourism hub from a tech city. They'll be building hotels, apartments, and a marina to connect with the lagoon. And this will be valued at $1.2 billion, down from $6 billion. Now, the government is hoping to raise 600 billion CFA francs from private investors, and then it will chip in 65 billion CFA francs. However, there's a big problem in the country. When President Bashir came into power, An audit revealed that the previous administration had accumulated $7 billion of unreported loans, and this pushed the IMF to freeze their $1.8 billion program with the country. So they might have a bit of a problem trying to woo investors to come and invest in the country, but the government is a little bit optimistic. They say all factors constant, they've seen good interest in the project, and they're still hoping that they can turn it around, bring some economic benefits, and create jobs in the country.
Bloomberg's Andira Ganga in Kigali, Rwanda. I've got to thank you for bringing us this story, because I'm going to go and listen to some Akon tunes from era 2005, 2006 now. All right, thank you. Now for a look at some of the other stories we're following. U.S. President Donald Trump's administration has discussed sending deported migrants to Africa. The idea was mentioned with 5 of the continent's leaders at a summit at the White House. The talks came barely a week after the U.S.'s highest court cleared the way to remove 8 migrants held in Djibouti from nations including Myanmar, Sudan, Mexico, Vietnam, Laos, and Cuba to South Sudan. But a volatile political dispute in South Sudan has raised concerns about the destination, which could be urging the U.S. government to view the 5 Central and West African nations as a better alternative. Nigeria has secured a $747 million syndicated loan for a controversial highway set to link the nation's commercial capital to a key coastal city. The Deutsche Bank-led fund will finance the first phase of the 700-kilometer Lagos-Calabar highway. The $10 billion project was first criticized by opposition leaders when it was awarded in 2023 to a company owned by a close confidant of President Bola Tinubu. But the presidency defended the project, saying it's vital to providing economic opportunities to coastal communities in the southern part of Nigeria. Barrick Mining says Malian government helicopters landed unexpectedly at a gold mine and seized more than $100 million worth of gold on Thursday. The move marks another escalation in a protracted dispute between the West African country and the Toronto-based company. Barrick closed down its giant Lulu Gungoto gold mining complex earlier this year after Malian authorities blocked bullion exports and detained senior employees. And coming up, Nigeria says it's seeking for its oil production quota to be increased. We hear from the NNPC CEO Bashir Ojulari on why he thinks optimism around oil demand is realistic. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in London. Nigerian National Petroleum Company says the OPEC Plus decision to accelerate the return of barrels to the market was the right thing to do. CEO Bashir Ojulari told us Nigeria expects to raise oil production capacity to about 2 million barrels a day by 2027.
The geopolitics for oil and gas, which you know very well, requires a balance. And the OPEC and OPEC Plus is all around striking that balance. The details and the deep knowledge around the market, balancing supply availability with price, and that's what this is all about. So it's all in a broader interest of both consumers but also suppliers as well. So I think it was the right thing to do.
One of the impressions that I've got from the seminar the last 2 days is quite a lot of bullishness, not only about short-term demand, but also long-term demand as well, with the World Oil Outlook that was released an hour ago. Yeah. Do you share that optimism? Specifically, now I'm talking about short-term demand.
Yes, I do share the optimism. You know the way this goes. Typically, I mean, most people didn't predict what happened with respect to Iran in recent times, right? So a lot of factors comes into these demands. There are upsides, there are downsides. So basically, I think this optimism is realistic. I think the other thing we need to keep in mind is that over the last several years, there was a lot of drive towards energy transition. Quite a number of activities were delayed. A lot of investment were also delayed. Now, those investments are coming back up. Everybody is becoming clear that we need a balance in terms of the supply of energies. The overall progress with respect to the renewables have been a little bit slower than we all expected, and yet the demand for energy remains. So that lag is what you see is coming back in terms of recovery. That's my view.
What about in Nigeria? Can we expect production to keep going up in the coming years?
Very good one. The first thing, Nigeria is a member of OPEC, as you know. So our expectation is that whatever we do in Nigeria, we still remain connected with OPEC. But in terms of our production growth plans, we expect to, build capacity to about 2 million barrels per day by 2027, and also build our gas from about 7 billion cubic feet per day to about 10 billion cubic feet per day by 2027, and then grow from that as well. So that growth is started. If you notice this year, somewhere around March, we're about 1.56. We're now at about 1.63. That's both oil and condensate. By the end of the year, we're hoping to have clocked up to 1.9.
NNPC CEO Bashir Ojulari speaking to me at the OPEC seminar in Vienna. Well, before we go on this Friday, here's something for lovers of luxury. The original Hermes Birkin bag has sold for a record $10 million at an auction in Paris. The 40-year-old black leather handbag was made for the late singer and actress Jane Birkin and was sold after a bidding war that lasted more than 10 minutes. Tokyo-based designer goods reseller Valuance Japan said it was the buyer, adding that the bag was not intended for resale. Instead, the item will be carefully stored and exhibited as a piece of, quote, global cultural heritage. So that's the last thing that I want to say. Hopefully, Mr. Versace is watching. That's it for our show.